I just found the fastest way to become profitable in trading, and in this video I'm gonna reveal you the step-by-step plan to become profitable fast. This would have saved me years, but I had to lose for 2 years before because I didn't know about this. But now I've been consistently profitable for about 2 years making money in these markets. Most traders will lose years in these markets because they don't find the right mentor, they don't have a right strategy, and they overcomplicate everything. And I don't want you to go through that. I want to see you win. So enough talking. I'm gonna reveal you everything in just 3 simple steps. Let's go. The first step is to always focus on the market trends. And there's only 3 trends you need to master. There's the uptrend, downtrend, and consolidation. But to be honest, there's actually only 2 trends you need in order for you to look for buys or sells, and it's these 2, uptrend and downtrend. Consolidation is just sideways movement that is caused from equal amount of buyers and sellers or just low volume. So you need to forget about this one, and you don't want to actually see this because this is gonna lead you nowhere. So let's just focus on these 2. And the reason why we want to focus on trends is because trends are literally the lifeblood of markets. It is how these markets are made of. Okay, so uptrend, it moves in higher highs, higher lows, higher highs, higher lows, higher highs. Downtrend moves in lower lows, lower highs, low lows, lower highs, low lows, right? And our one and only job is to follow these trends consistently. So if you see this uptrend, we're gonna look for buys. Okay, we're gonna buy the markets. If you see the downtrend, we're gonna short the markets, sell the markets. I'm gonna literally show you really soon how to actually do that, how to actually make money with this one. But first of all, you need to understand a little bit more about these trends. So essentially, the big move of the trend, this right here, is called an impulse. And the smaller move is called a retracement. So impulse, retracement, impulse. Okay, that's how the market moves in trends, and the price needs to retrace so it can fix the price. And same in the downtrend, this is an impulse, retracement, impulse, retracement, impulse, right? Now, the thing that most people get wrong in these trends is that they look for buys in an uptrend right here. But that is not the case, because here it could actually create a market structure shift that could start to trend down, and then you would lose the market, you would get liquidated, and you would become a statistic. What you want to do is wait for the new higher high being created. So when there's something called a break of structure, it is called a break of structure when this high closes above this higher high. So this is now a higher high, so we're gonna buy in here. And if you miss this trade right here, you're gonna wait for the retracement and then impulse. You're gonna buy at the impulse when the candle actually closes. And obviously you're gonna put the stop losses below these higher lows and target and follow the trend. Simple as that. Same in here. So look at this. Now we're in the markets. I'm gonna literally show you how we can step by step follow the trend. It's so simple yet so effective. I do this every single day in these markets and make a ton of money. So how does the uptrend move? Simple as this. Look at this. This is a higher high, higher low. Remember, this is the retracement. This down candle is the retracement. This is the impulse. And again, another impulse. So this is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? As you see, move consistently, and you want to buy in here. So we're gonna look for buys in here. If you go to the replay mode, literally, we can see that, okay, now that we made this impulse, here's a retracement. So what I'm gonna do is that I'm gonna actually not look for buy yet in here. I want to mark out this right here, this higher high, the highest where the price was being after the retracement. So this is a retracement. I want to see an up candle close above this high right here that I just marked out, because then there will be the new higher high, and we want to be buying right there. Okay, there we go. So we actually just closed right here, and right here I would actually buy the markets and put a stop loss. Remember, where would I put the stop loss? Below this higher low. So this is the higher high, higher low. I'm gonna put the stop loss right there. So I would buy right here. As soon as this candle closes, I would buy, and it only counts when the candle closes. Remember that. That's when it's called a break of structure. So right here is now our break of structure, BOS. Remember that, BOS. And this is how we follow the trend. And let's see. Boom, there we go. And right here, what do we create again? We get the impulse, retracement, impulse, retracement. Simple as that. Right, so that was step number 1. Always follow the market trends, no matter what. And then step number 2 is to master reshort ratio. Look at this right here. This is our entry, right? This is reshort ratio. Reshort ratio is essentially your risk versus your profit. So let's say if I risk $100, if I lose the trade, okay, it's gonna be minus $100, right? But if I win the trade, which most likely I'm going to win if I follow the trend as in step number 1, then I will make $200 because it's 1:2 reshort ratio if it hits the target right here. But obviously, if I target even higher, it's gonna be more. So if it's 1 to 3 risk-reward ratio, I'm gonna 3x my risk following the trend. We're gonna go there and make $300 if I risk $100 right here. So that is the key. You need to master risk-reward ratio, because the risk-reward ratio is everything. You know, I remember way back I was actually losing in these markets. Even though I had a good strategy that worked, I had a good win rate, but my risk-reward ratio was shit. I always had like negative risk-reward ratio like this, and even though I won many trades, I wasn't making money until I figure out that risk-reward ratio needs to be very nice. And usually I like to personally target my trades in between 1 to 2 and 1 to 4 risk-reward ratio. So these are my ideal risk-reward ratio depending on the trade quality. So if you master risk-reward ratio, you can actually make a lot of money risking less money. Step number 3 is to create yourself a personal trading plan. In trading, we don't have a boss who tells us what to do at what time, so we need rules to follow. I remember back in the day when I was unprofitable in trading, I just thought that, okay, I'm gonna go to the markets and just do whatever I want and make a lot of money, but I was dead wrong. That caused me to lose because I didn't have rules to follow. So now we have to create ourselves rules in trading. So it's your trading plan. This is something that you're gonna follow every single day religiously. So first of all, you obviously need to have your strategy, your trading strategy, whether is it the trends that I actually taught you or some other stuff that you want to use. But me personally, I have my full strategy in my trading plan and I will follow it. But nowadays I know it like from the back of my hand. I don't even have to check my trading plan, and you'll get into that point later. But first you need to obviously write it down so you can remember it, and then later you don't even need the trading plan to know your strategy. But first you need to do that, okay? So have your strategy in the trading plan, and then this is the most important thing in your trading plan. It is your risk. So what you're gonna do is you're gonna write down how much am I going to risk per trade, whether is it 1, 3, 5% a trade. You need to write that down. I personally have a rule: if the trade setup is A+, I'm gonna risk a little bit more, but no more than 5%. And if it's like, okay, mid-tier trade, then okay, 1% per trade. So for me, my low risk is like 0.5% or 1%, and my highest risk is 5% per trade. And this is very important as well. When and what. You may wonder, what the hell is this? Well, this is like, when are you gonna trade, at what time? Are you gonna trade on Forex sessions such as Asian, London, or New York session? Or are you gonna trade on New York Stock Exchange Open? You have to know when are you gonna trade, and then what pairs are you gonna trade? Are you gonna trade Forex like GBP USD? Are you gonna trade stock indices like S&P 500? Or are you gonna trade futures like E-mini futures? You have to choose what are you gonna trade, obviously. So these are the main things you need to have in your trading plan, and this is something you're gonna follow religiously. Okay, this is so important. This literally is your rules, and this is essentially what you're gonna do every single day. Because like I told you, in trading, we don't have a boss who tells us what to do. So you need to be your own boss, and you need to be disciplined enough to follow your trading plan, okay? That is the key to success in trading, because your trading plan allows you to have structure in your trading and predictable outcomes. If you made it this far, then comment down below success. And as a thank you, I want to give you something. I'm gonna teach you how you can start making $10,000 a month at least in your trading. And you can learn that by clicking the first link in the description, or click right here if it pops in here. Hey man, as usual, I will see you on the other side. Peace out.